Last week, Bezos, Mark Zuckerberg, Jamie Dimon, and Buffett all orchestrated a major stock sell-off. These same people are now beginning to show us some other really intriguing trends, which we will discuss in today's video since they're having a significant impact on your Bitcoin holdings at the moment, and you most certainly deserve to understand what is truly happening. I feel like these elitists and extremely wealthy people belong to a club, and none of us are a part of it. In order to profit from these periods of high volatility, I believe that the least we can do is to sort of observe what they're doing, why they're doing it, and where they're getting their information from, and then do our best to mimic it. I would want to start by discussing Warren Buffett. In his 2024 letter to shareholders this year or last year, or that matter, Warren Buffett made one point very clear. In essence, he would rather have the majority of Berkshire Hathaway's funds invested in stocks. He has already sold hundreds of billions of dollars worth of publicly listed stocks, including significant sections of his holdings in Apple and Bank of America, as we have seen throughout 2024 and 2025. Additionally, we can see that in December, his cash reserve reached a record high of $334 billion, with the billions of dollars and more in stocks he recently sold. We're going to receive an update on how much of that has increased recently. However, Berkshire Hathaway isn't the only company selling off enormous quantities of inventory. This is also what Jeff Bezos is doing with his Amazon stock. As you can see, Jeff Bezos had almost 1 billion shares of Amazon in the beginning of 2024. And as of right now, he's basically trading at around 900,000 shares. In the course of a year, he has essentially sold about 8% of his total shares, and he plans to sell even more in 2025. Naturally, this is highly intriguing when you consider the performance of the markets throughout the periods when they have been selling off the majority of their funds. This video clip, which I want to show you right now, provides a really fascinating narrative in that respect. We'll then get into the specifics of what this means, how they're doing it, and how you may profit from it. So pay attention. I'll play this first and then we'll discuss that. Has more treasury bills than the Fed now by $91.1 billion. He also won't explain why. He did not specify what he is looking for in his eagerly awaited yearly letter from Berkshire. Rather, he stated that he still enjoys investing and that this was not a move away from stocks. However, let's face it, wealthy people, particularly those at that level, do not base their purchasing and selling decisions on sentimentality or affection. Buffett is not the only one who feels this way. Just now, Jeff Bezos sold $5.1 billion worth of company stock. Since he left his position as CEO of Amazon, this is the biggest sale he has ever had. Specifically, does he believe that Amazon's heyday is over? Mark Zuckerberg comes next. He recently sold Meta stock for $500 million. This is where things start to get strange. Meta is putting more effort on AI. Mark Zuckerberg, the CEO of Meta, announced that the digital giant is stepping up its efforts in the field of artificial intelligence, leaving the metaverse behind. Is this only a change, or does he think AI is too unpredictable? Walmart's CEO, the Walton family, recently sold $5.1 billion worth of company stock. Are they concerned about a slowdown in consumer spending, or is this all just a typical portfolio rebalancing? All of us have witnessed sell-offs in the past, but not in this manner simultaneously. Not with inflation on the rise once more. Not when the amount of credit card debt is at its highest point ever, $1 trillion or more. It would cost that much to rid this nation's citizens of their credit card debt at this time. Inflation, stagnant earnings, and rising credit card interest rates all contribute to the cost of living. Not with corporate debt reaching perilous heights. Not just billionaires are profiting from this. Americans accumulated an additional $45 billion in credit card debt in the most recent quarter alone. Furthermore, it is practically hard to pay it off with credit card interest rates of 23%. More defaults, late payments, and borrowing for necessities are all on the rise. Thus, basically, please be patient as we explore a little deeper into these sell-offs and the reasons for their impact on the cryptocurrency market. However, I only want to discuss the Fed's possibilities based on the information you just saw, correct? Basically, there's one thing that all of the top CEOs agree on. They are arguing that many equities are simply a little bit more overpriced right now due to the abundance of liquidity in the marketplace. A rebalance is required, quantitative easing must continue, and the Fed must print more money. We must return to our previous level of performance. Around in 2020, correct? 2021. And I can bet my bottom dollar that all of these tech CEOs will be reinvesting billions of dollars into scaling operations in AI and other industries they think will take off, as well as buying back enormous amounts of their own stocks if we can accomplish that and the market see an increase in liquidity. And in order for you all to truly comprehend how insane this is, I just really want to get this out of your system. As you can see, Jamie Dimon, the CEO of JP Morgan, sold $234 million worth of stock on February 20. Warren Buffett declared a record cash position of $334 billion on February 22 end. And the NASDAQ 100 fell 11% 12 days later. How are they aware? All of these people, I believe, are in discussions with the US administration over the implementation of their policies, and they are aware of when the tariff battles will intensify and what Trump's policies will accomplish. In essence, they are just receiving this knowledge and selling their stocks ahead of these significant announcements in order to ensure that they do so at a more suitable moment. As you can see here, Jamie Dimon sold it. In fact, there was a huge dump on the day of the sale, but he still managed to catch the top spot when you look at the remainder of the chart. Similarly, Warren Buffett did a respectable job of capturing the top spot there as well. However, we can now see that we have been trending lower ever since, and I can assure you that all of these guys will prepare to buy back in if we continue to decline, particularly if the Fed does make a change. The one thing we will see, though, is that all of these people will begin purchasing stock before we even realize the Fed has made a 180-degree turn, because once more, they will obtain this inside information before we have an opportunity to do so. Additionally, we can observe that the markets are currently really apprehensive, which means that now is the ideal time to buy and essentially use dollar cost averaging. When individuals are afraid and unsure, you want to buy. You don't want to purchase while everyone is extremely optimistic. It's likely that you will be destroyed. As you can see, JPM sold 866,000 shares on February 20th amidst all of the news and market commotion. Then, over the years, JPM's sales and acquisitions have been extensively criticized. Additionally, they are typically thought of as a leading sign for the market as a whole. In just a few days after Diamond sold these shares, JPM has dropped 13%. We now return to the Diamond bottom. When panic broke out during the May 2020 pandemic, Jamie Dimon joined CNBC on May 23, 2020, and stated that JPM was extremely helpful during the crash. JPM has risen by an astounding 41% in just 3 weeks since the low. It was a historic event. To put it another way, Jamie Dimon essentially sold out most of his stock when it wasn't in a slight bubble, and they then repurchased it close to the bottom, exactly here. After that, there was a huge historic rally, and this came after Jamie Dimon stated that their stock was essentially undervalued and that not enough people were purchasing it because, well, they would essentially make a lot of money due to the increased market liquidity, which is fantastic for banks, tech stocks, and cryptocurrencies. Therefore, I believe that we will witness